Hey there, my name is Ken and today we're talking all about Ethereum. As I follow and analyze the crypto space, it only seems that an Ethereum will be going much higher. So I propose you trade the like button and invest in subscription to the channel, and let's go. You're also welcome to support the channel, all the links are down in the description. Today in this video, there's a great video for you guys. There was a recent interview with a former ARK Invest professional analyst and it was all about Ethereum. ARK Invest is one of the top investment firms in the world. More about it in this video. And James Wang worked there for several years as a professional analyst, and he'll be sharing some big insights on how Ethereum could be going to $40,000. We'll be breaking down exactly how that could happen. By watching the full video, you'll get to know how Ethereum could get to $40,000 and how we can all benefit from Ethereum right now. First, let's review a little bit about who is James Wang. He's a professional with degree in computer engineering. He has recently worked as an analyst at ARK Invest for the last 6 years, and before then he did 9 years as a product manager for Nvidia. So I'd say obvious strong point is going to be an analysis, digital and technology. If you also follow the crypto market, we recently had a big 30% pullback in crypto. So what's his thought on the volatility of the crypto market? Let's find out.
It's nothing. In crypto land, this kind of price movement, 5-8% on a given day, that's nothing. That's like the cloud passing over New York. It happens all the time. It's like if you're worried about if this shakes you out, you should not be in crypto, because this will happen every couple of weeks or days sometimes. And when it really tanks, like we're talking 30-40% down in a single day. So if that doesn't sound like your cup of tea, stay in the S&P 500.
Yes, I'm probably the S&P 500 guy, because here's the thing, crypto market is constantly doing these big 30% pullbacks. At the time it can seem pretty scary and that the whole thing is gonna come crashing down one month. You might be thinking, why is it so volatile? Well, the problem at the minute is that no one really knows the true value of the crypto market. Another most important part of investing is asset allocation, which means where should we be putting our money, options, stocks, bonds, crypto or gold. Let's see what James Wang thinks about it. He shares his personal asset allocation.
In the liquid component, and I tweeted this out a couple of months ago, it's 70% crypto, about 30% equities. There's some cash, but it's so small, it's like I can't see it on the pie chart. So I am majority crypto right now. Any asset allocation is kind of like you're weighing the options available to you right now, right? So in terms of liquid allocation buckets available to you, you have fixed income, which I think is not interesting to most of the listeners on this show. You have equities, which I hold, a reasonable amount because I've been investing in equities for the last 10 years or so. But when allocating new capital, you kind of look at, and there's of course crypto. When you're allocating new cash, you're trying to ask yourself which of these have the best risk and return profiles. And when I looked at a couple of months ago, it was at fixed income, I'm not going to touch. Equities is just extremely expensive. Even if you believe in all the great narratives about tech, it is still very expensive.
As you see, he is clearly very bullish on the crypto market, so it's fair to say he is fully invested, and the reasoning had to do with the different risk and reward profiles for each of the different asset classes. Fixed income or bonds are at historic lows, stocks are very expensive right now, so it's crypto that is giving the best upside potential when compared to its downside risk. But remember, it all comes down to your personal risk tolerance and what is the actual risk. Well, that is what everyone is still trying to figure out. So now we have the big Ethereum price prediction of $40,000, and that's a big increase from today's price. Let's find out from James Wang.
In 2017, we weren't sure what Ethereum was able to do. We only had this idea that this could be a new kind of computer for the internet, a new platform for the internet, but we had no idea. So all kinds of ICOs, initial coin offerings came out, and we had stuff from Coin and weird things that didn't make any sense. Over the last 2 years or so, 2 use cases actually have emerged for Ethereum. One is this thing called decentralized finance, or what people call DeFi, basically using Ethereum to do things that banks used to do, borrowing, lending, and things like that. The other one is NFTs, non-fungible tokens, where essentially any artist now has a piece of magical software that allows them to mint unique and scarce digital assets. We could never create scarce digital assets prior to, practically speaking, Ethereum's kind of NFT technology. So now we have these two things. If you try to value Ethereum 3 years ago, you couldn't have come up with any of these because you wouldn't have known ahead of time that they were going to be invented. So narrowly speaking, you could value Ethereum's opportunity in terms of the scale of the financial system if you just look at DeFi, and that's roughly speaking about $3 trillion a year. That's the amount the global banking and auditing system it generates per year, about $3 trillion. But yeah, like basically it's like if you just want to take a conservative view, take the global financial system and the banking system and the auditing system, $3 trillion in revenue a year. If Ethereum captures 0.1% of that revenue, it would be worth about $4,000 a token. If it captures 1%, it would be worth $40,000 per Ethereum, per Ether. And that's a 20x from where we are today. So like that's very clear. And that's only one use case, right? And because it's a platform, it can, like 6 months from now, we could be talking about some entire new case we couldn't have imagined and estimated right now.
So basically, the global financial system is doing about $3 trillion in revenue per year. This is centralized finance. If decentralized finance, which is currently built on Ethereum, can take just 1% of that, this is how Ethereum would be getting to $40,000. Well, talking about what Ethereum could be doing in the future, but what about today? How do we benefit from Ethereum right now? Let's see.
I just put out a newsletter on kind of 5 actually useful things that blockchains can do in 2021. Like these are things I think normal people would be interested in, not just like people in crypto. You ask someone in crypto what, like, oh hey, can Ethereum do anything? They'll be like, yeah, you can mine for liquidity on automated market maker. And you're like, what does that mean, and why would I be interested? They think very funny. So I picked out things that like normal people would be interested in, and you can check out the newsletter. But I think of the things we talked about, lending is by far the most no-brainer activity you can do, because just the number of people who have a bank account is in the billions, and the number of people who would be interested in earning a above inflation rate return on just your savings is everyone on earth. So you could argue that's a TAM of 7.5 billion people right there, and Ethereum will do that for you today, right? So if you have $1,000 and you want to earn some interest, if that's lingering in your bank account, that's earning less than 0.5% interest. You can shoot that $1,000 to Coinbase and convert it to a stable coin, so like USDC. These stable coins are not speculation instruments. They're pegged to the US dollar. So 1 for 1, you turn into $1,000 USDC, and then you deposit it into one of these crypto lending platforms. This is just software again, right? This could be Aave, this could be Compound, this could be Yearn, dozens of options for you. And roughly speaking, it will earn you like 10-15% APY on that immediately. A couple of things different about how this is versus like a CD or term deposit bank. There's no term, so you can deposit at any time, you can withdraw at any time. There's no like limit. Like if you do a CD and you withdraw early, there are nasty penalties and all kinds of nonsense with that. The second one is it's a variable interest rate, call it account. So one day it could be 10%, the other day it could be 12%. It fluctuates based on the market demand for this specific stablecoin you're depositing.
Okay, now let's bring all this together. When it comes to the volatility in the crypto market, 30% drops are quite frequent, and it's just something you're going to have to get used to. Your asset allocation is always going to be based on your own personal risk profile, and only invest money that you are able to lose. The one thing that people are still desperately trying to figure out is what is the true value of the crypto market, and also what is the true value of Ethereum right now. As you saw, if Ethereum D5 could just take 1% of the global financial system's revenue, then this is how Ethereum would be getting to $40,000. And the great news is that there could be many more use cases for Ethereum coming very soon. I hope you guys got useful information about Ethereum. Let me know in the comments, do you believe in Ethereum to get to $40,000? Here are more other videos about personal finance and investments. Make sure to subscribe to the channel, like the video, and hit the notification bell. See you in the next video.